ETFs, or exchange-traded funds, are the versatile building blocks of modern portfolios. They're easy to use, cost-effective, and let you implement virtually any strategy with simplicity. We'll break down how they work, why they've exploded in popularity with trillions under management, and how they enable beginners to apply passive, thematic, or tactical approaches effortlessly. If you felt intimidated by individual stock picking, ETFs offer a straightforward way to diversify and customize, making them essential for today's investors looking to construct a solid financial structure. ETFs are baskets of assets, like stocks, bonds, or commodities, that trade on stock exchanges just like individual shares, allowing you to buy or sell throughout the day for instant liquidity. They work by pooling investor money to replicate an index or theme with ultra-low expense ratios of 0.05 to 0.5%, far below traditional mutual funds' 1 to 2%. Why popular? They provide broad exposure. For example, a single S&P 500 ETF like SPY gives you ownership in 500 top U.S. companies, delivering market-matching returns of 8 to 10% historically, with built-in diversification to reduce risk from any single stock's failure. Unlike mutual funds, ETFs are tax-efficient and transparent. You can see holdings daily, and they've grown to over $10 trillion globally because they democratize investing, letting beginners access complex strategies without expert help. Think of them as Lego blocks. Stack a global stock ETF with a bond one for a balanced tower, or use thematic ETFs for trends like AI, which have surged 20 to 30% in hot years. ETFs shine in application. For passive strategies, grab a total market ETF to mirror what you've learned about indexing, with fees so low they preserve more of your 7% gains. In thematic investing, a clean energy ETF lets you bet on the future easily, potentially adding 12 to 15% to targeted growth. For tactical shifts, swap sector ETFs like tech to healthcare based on cycles, adjusting in minutes for adaptive 6 to 8% returns. Why they let you apply any strategy? Versatility. Over 8,000 ETFs cover everything from commodities to ESG, and they're beginner-friendly. $100 on platforms like Vanguard or Fidelity. Auto-investing monthly for hands-off building. Practical tip. Check expense ratios and trading volume for liquidity, aiming for under 0.2% to maximize efficiency. Reflect. How could ETFs simplify a strategy you're considering, like blending passive with a personal theme? This building block approach makes modern investing accessible, scalable, and fun for all levels.